ABC Listen. Podcasts, radio, news, music and more.
Hi News Daily listeners, I'm Erin Park and I wanted to share with you my new podcast, Expanse, Nowhere Man. If you've ever considered a digital detox, just how far would you really go to disconnect? This season of the Expanse podcast is about a young American who in 1999 set off alone into one of Australia's biggest, deadliest deserts. And what happened out in that desert made everyone involved think about life and death and who we are when everything easy is stripped away. Subscribe to Expanse, Nowhere Man, on the ABC Listen app and all the usual places.
The Reserve Bank Board has defied the expectations of investors, many economists, and even the Treasurer. It's not giving borrowers an interest rate cut this month, revealing a 6-3 split on the decision to keep rates on hold. Today, the ABC's business editor, Michael Janda, on whether the RBA is playing it too safe. I'm Sydney Peed on Gadigal land in Sydney. This is ABC News Daily. Michael, I was listening to the news on Tuesday morning and everyone was saying that a rate cut was almost certain. Lock it in.
Most economists are expecting the Reserve Bank to cut interest rates to 3.6% later this afternoon, but there is some uncertainty about how aggressive the RBA will be in the coming months.
Economists and financial markets are betting the Reserve Bank will cut interest rates today.
Well, it sort of looks like a no-brainer that the Reserve Bank's going to cut the cash rate again. There's more than a 90% chance priced into financial markets at the moment.
But the Reserve Bank Board says no, they need to hold. What was your reaction?
I was very surprised too. I was one of those who thought after the May monthly inflation indicator from the Bureau of Statistics that showed headline inflation at 2.1% and the trimmed mean over the past year at 2.4%, and that's both below the midpoint of the bank's 2 to 3% target. For me, that was enough to lock in a rate cut this month. But it seems the Reserve Bank Board, or at least 6 out of 9 members on the Reserve Bank Board, because there was a disagreement, 6 out of 9 thought that the monthly indicator is not reliable enough to indicate where inflation is. And the Reserve Bank Governor said in the press conference that the Reserve Bank economists think inflation might be quite a bit higher than that indicator suggests, and they want to see the full quarterly figures before moving rates lower again.
Economic conditions remain uncertain. We're waiting to confirm whether inflation is still on track to sustainably reach 2.5%. Since the May meeting, the 2 monthly CPI indicators have been broadly consistent with our forecast for headline inflation and show that we're moving in the right direction. However, some components suggest that underlying inflation in the June quarter could be a little higher than our forecast.
And you've just come out of that news conference with the RBA governor. So as you mentioned, for the first time, they've revealed the voting split. It was 6 votes to hold versus 3 votes to cut. Just explain how the board works, because it's surprising to get that insight, isn't it?
Well, it's a first for Australia, but it's very common among central banks overseas. And in many central banks, you actually know which board members voted which way. But given that it's baby steps, for the moment at least, the Reserve Bank Board is not revealing, and the Governor certainly wouldn't offer any hints, despite being asked several times in the press conference about who voted which way on the board.
So they're unattributed votes, so I can't tell you who voted what way. What I can say is that what it demonstrates, I hope, is that there was really good active debate in the boardroom about the pros and cons of holding and easing.
But for the first time, we now know there was a disagreement. Traditionally, the Reserve Bank Governor has always said that decisions are generally made by consensus, but we clearly know this time there was disagreement. As Michelle Bullock said, reasonable people can disagree about the conclusions to draw from the same set of facts.
Now, the Treasurer, Jim Chalmers, always does a news conference after the RBA decision. He would have been welcoming a rate cut. He knows a lot of voters with mortgages would have liked a cut, but he's very careful not to criticise the RBA, isn't he?
Yeah, he came as close as a treasurer probably safely wants to get to criticising the RBA by saying how disappointed millions of Australians would be with the decision.
I think I've been upfront in saying that I acknowledge that there will be millions of Australians around the country who are desperately hoping for more rate relief today, in addition to the 2 rate cuts that we've already seen over the last 5 months. I think I've been upfront in saying that this decision will come as a surprise to the market, has come as a surprise to the market.
Within that 6-3 vote, one can only guess, and we've been told that the Treasurer doesn't know which way his department head, the Treasury Secretary, who sits on the board, voted. But, it wouldn't necessarily be a bad guess to think that the Treasury Secretary might have been one of those 3 who voted for a cut, but we don't know. We don't get to see who voted which way. I'm sure a lot of analysts will be speculating. But yes, as the Treasurer has said and the Reserve Bank Governor acknowledged in the press conference, there will be a lot of homeowners who would have liked to save an extra $50 or $100 a month off their mortgage, and they'll have to wait till August. But unless the inflation figures for the June quarter, which come out later this month, surprise significantly on the upside, I think it is safe to say, including from what Michelle Bullock said and her description of the board discussion, where she described it as more of a debate about timing than direction, that strongly indicates that they've not cut now, but they are very much intending to cut in August, unless there's a very good reason for them to hold off again.
She was pressed in the comments that she normally makes after these decisions. How did she explain herself and the RBA's decision?
It was basically a question of uncertainty, and they're still seeing, or 6 out of the 9 members on the board are seeing the balance of risks as being that inflation might not be fully under control. And as she said, inflation is the thing that hurts households more than high interest rates.
And I understand that households with mortgages are very keen to see interest rates decline because it helps them with their cash flows, so I'm very conscious of that. I'm also really conscious that we don't want to end up having to fight inflation again. We want to make sure we've nailed it.
I guess the argument is inflation hurts all households through a rising cost of living, whereas interest rates mainly hurt the 1/3 or so of households that have a mortgage, particularly those that have more recent, bigger mortgages. And she was expressing the concern that inflation, the battle wasn't totally won. One of the key areas the Reserve Bank's concerned about is wages growth, and more particularly the relationship between wages growth and very low productivity growth.
Okay, so wages, inflation, a huge part of this decision. How much concern remained about the trade and global economy and the impact of US President Donald Trump and his tariffs? Because in recent months, the RBA has been very worried about a trade war.
Yeah, there's 2 arguments there, and there were a few questions about whether the Reserve Bank was trying to keep some powder dry to respond if on August 1, for instance, when the current extended tariff holiday ends, or reduced rates of tariff end, and deals haven't been struck. If markets have a conniption, then the Reserve Bank will have more ammunition because it didn't cut today. Michelle Bullock poo-pooed that idea. She said, look, we're not keeping rates where they are purely to have more room to cut them if something really bad happens. If we thought we needed to cut them now, we would have. But she did also point out that they're in a much better position now to respond to a global economic crisis than before COVID, where interest rates were already down to about 1.25%. And so when the pandemic hit, you were looking at, how far do you have to cut from 1 or 1.25%? Well, not very much. And then you had to go into all those extraordinary monetary policies like the basically cheap money to lend from banks to mortgages and small businesses, the government stimulus programs. This time around, the RBA has a lot more room to move, and if something really bad happens, then we might be looking at a 50 basis point cut in August. That's half a percentage point, having skipped this cut in July.
Okay, but Australians who are repaying home loans, they have really been struggling. They've had some interest rate cuts, but after years of surging inflation, many will be feeling that they need these cuts as soon as possible. So is the RBA being overly cautious here?
My personal view is yes. I think after those inflation numbers, and Michelle Bullock did say there are a couple of things in the detail that actually had them worried that inflation in the quarterly figures might come in higher than their forecasts. But I really find that hard to believe if the ABS is doing at all a decent job on these monthly numbers, that the quarterly outcome could be so vastly different. So I think they could have cut now, and then if the quarterly numbers weren't great, they could have just skipped the cut in August. They've chosen to go the other way, which is to forgo an interest rate cut now and wait until they've got those more detailed numbers to be sure about making a cut in August. But as you point out, there are a lot of people suffering in the meantime. 6 weeks is a long time if you're only just paying your mortgage. I think, though, the comfort for the Reserve Bank is that the 2 rate cuts they've already done have probably taken enough of an edge off so that those people who were just about to have to default or sell their homes are still able to just pay their mortgage. So they might be struggling, but I think we've seen the peak in default rates, and that gives the Reserve Bank a bit more breathing space to hold off until it's sure it can cut rates without re-sparking inflation.
And what about for those people who aren't home owners? Is the RBA board concerned about what happens to house prices if rates are cut? Because when interest rates fall, people tend to borrow more to buy a home, right? Which in the end pushes the prices up.
Look, as the Reserve Bank Governor Michelle Bullock pointed out in the press conference, I can't win.
I'd say, though, it's not only interest rates that are the issue for the young people, it's the housing prices. And there's nothing we can do about housing prices. And in fact, I've heard criticisms that we shouldn't lower interest rates because housing prices will go up. So we can't win, really. We can't put them up, we can't put them down.
As she's repeatedly said, and I've asked her at many press conferences about housing prices and interest rates, she maintains the Reserve Bank does not look at housing prices when it sets interest rates. It's not in its mandate. Its mandate is around maintaining stable prices, that is inflation, between 2 and 3%, and maintaining full employment, that is the lowest rate of unemployment without inflation getting out of control. And she says that's all the Reserve Bank focuses on, with a side focus on financial stability and making sure the banking system doesn't blow up.
Okay, well, a cut was almost a sure thing, but this month we've seen it on hold. You just can't really predict what the RBA is going to do, can you?
You can't, although the Reserve Bank Governor herself gave about the strongest indication she could that interest rates will fall in August, provided that the June quarter consumer price index, the inflation figure, comes in somewhere in line with the Reserve Bank's forecast. If it's in line with their forecasts or below, I think you can bake in a rate cut. 99.9% certain.
Is that a risky move from Michelle Bullock? Because we've heard strong indications from the RBA before. Remember the infamous forward guidance from her predecessor, Philip Lowe, whose comments in 2021 that he did not expect rate rises until 2024 was taken as a promise, and it made him a public enemy when it was broken.
I think it's a lot less risky when you give forward guidance about something that's 6 weeks away. And I think also Michelle Bullock was conscious that having shocked the markets and most market economists by not cutting interest rates today, she probably did have to give a strong indication that the direction of interest rates was still down. Otherwise, the market might have started making bets that perhaps rate cuts were done and that the final cash rate might be 3.85%. And I think she wanted to give a very strong indication that unless things change, the Reserve Bank's expectation is that there will be more rate cuts and that the next one will most likely be next month in August.
Near term, what we're looking for is confirmation that we are basically on our forecast path, and that gives us confidence that we are on a path towards easing further.
Okay, so Michael, what will you be watching for in the weeks ahead to get a new reading on how the economy is going and what happens next with interest rates?
I think there's two things. The main one is that June quarter inflation figure from the Bureau of Statistics. As I said, if that comes in anywhere around the Reserve Bank's forecasts, which off the top of my head were about 2.6% for the annual core inflation rate, then I think a rate cut in August is basically baked in. The second thing I'd watch is what happens around August 1 and Donald Trump's tariffs. If the tariffs end up being imposed at higher rates on a lot of key trading partners, such as Japan, such as South Korea, if the Chinese tariffs, which are due, the suspension of the higher rates is due to finish a couple of weeks after that, if they come back in at those trade crippling rates or anything like that, then I think your discussion about the August RBA meeting goes from is there going to be a rate cut or yes to how big's it going to be. And then I think you're looking at 0.5 percentage point plus if financial markets have a meltdown.
Michael Janda is the ABC's business editor. This episode was produced by Cara Jensen-McKinnon. Audio production by Sam Dunn. Our supervising producer is David Cody. I'm Sydney Peed. Thanks for listening.